Buying your first home is a huge milestone, but let's be honest, it can be a bit overwhelming. Don't worry though, I got your back. By the end of this video, you'll know how to plan, budget, and navigate the whole home buying process like a pro, even if you have limited savings. First, we gotta start with a solid financial plan. I start this right away because we need to have some money saved up. I wanna discuss what the costs are involved when buying a home. I'm not here to advertise or sell or get you excited about you can come in with no money. I want you to be prepared with the money that's needed for your dream home, or at least for your first home. So let's talk about it. And the first thing we wanna talk about is the down payment. Now, everybody gets this kind of confused, but the down payment refers to the amount of money that you're gonna put down towards your loan. See, the bank will lend you a certain amount of the purchase price of the property, okay? On a regular purchase, banks want about 20%. But being a first-time buyer, there's several programs that reduce that 20%. There's a conventional that does 3%. There's an FHA that does 3%. There's USDA that actually helps you and you come in with nothing. And if you're a veteran, there's the VA for you where you also come in with nothing. But that's what your down payment refers to. So in most cases, you are gonna need minimally 3 to 3.5% down. Next, closing costs. Closing costs involve everything having to do with the transaction when you buy a house. That includes escrow and title fees, your lending fees, and now your real estate agent fees. I'll make a different video on that. I'll put it somewhere here so you can link away. The last one I wanna talk about is moving expenses. This one typically gets forgotten about till you're in it. There's gonna be some expenses, moving trucks, getting help. Sometimes, most of the times, you want new furniture. There's things you're gonna need money for. So just be prepared for that. If you have a good financial plan, it'll help with this next one, your credit health. You have no idea how many times I reach out to people and they tell me, I want to buy a house, but I'm getting myself ready in a year or so. I'm working on my credit. And I'll talk to them a year later and they're still working on their credit. That's where I know that they jumped step number one, having a good financial plan. Because if you had a good financial plan, that automatically, organically starts fixing your credit. You start paying your bills on time. You start reducing your debt. You start using the savings if you have that plan. And I feel like a lot of people skip step one and get stuck on step two. You got to remember step two, your credit health. Because it's funny, and I made a video about this, how people always ask me, what's the interest rate at? And I'm sorry, it does make me because interest rates are based on the person, okay? They're based per client. The interest rate is specifically based on your habits, on your risk to the bank. So if the bank sees all your paperwork, everything's in line, you don't seem that risky, credit's great, debts are low, has savings, don't waste a lot of money, the bank's gonna be more inclined to offer you a lower interest rate. So for you, it might be lower than for your freaking neighbor. But what happens a lot of times is people are like, someone got this rate, I want the same. You don't have the same thing. When people ask me what the interest rates are at, to me, it feels like someone's asking me like, where's my cholesterol at? I don't know. I have to run tests. I have to check your credit. I have to do diagnostics to know where you're at. So it's not that easy, but I digress. This is why you want to have good credit health, because that's where your interest rate is based on, okay? And that means a lot of savings if you take care of it. Now, to me, pretty simple. I'll make a quick note on here to have great credit forever and ever and ever and ever. I know, especially in our community, we have the tendency that, se me pasó un pago, Like, no, it's really important. 35% of your credit score is, do you pay on time? Think about it. Credit means credibility, means how credible are you when someone lends you money, do you pay them back? To me, if you want to have great credit forever, there's only two things you got to always keep on top of. Number one, which is one hard one for us in our community, is paying on time. I see more bad, and I'm sorry, I don't hate to point out, but in my 8 years doing this, this is what I see. Sorry, facts, okay? I've been through it. Paying on time is 35%. The other 30% of your credit score, which is 65, that's why I tell people, focus on these two and you'll always have great credit, is credit utilization, all right? Credit utilization means how much do you use when we lend you money? Now, I know a lot of you are gonna be like, well, why do they lend me so much if they don't want me to use it? It's a game, all right? Once again, you know the rules of the game, you know how to play it. From what I know, when credit cards were invented, they were meant for emergencies. So what that means is that it's a line of credit in case something happens where you need to pay, but you can pay back quickly. And that's why credit companies like to see that your debts are no more than 30% of what you've been lent to, right? And that's why credit cards are better to create credit. I can get into that. But right now, I just want you to focus on that. You have to pay on time, get on auto pay, all right? And you have to keep the credit cards low. And watch what happens. I have a lot of people that have had like $500 credit cards forever. And they're like, I always pay on time, but it never goes up. It's been at $495 forever. But I got other people that got a credit card for $300, only used $100. And within 6 months, the same credit card company will raise their limit to $1,000. So keep your credit limits low. The credit card companies will love you. You'll always have great credit. Okay, so let's have great credit. Next one, know your budget. And here's how you got to calculate it. I'm gonna give you two options, right? How the bank calculates it exactly. And if you feel like that's not what I can do, let me give you some pointers on how to get there. So first, the bank's gonna calculate pretty simple, all right? It only wants you to be in your monthly debts, which means your car payments, all credit card payments and all that, cannot exceed 55% of what you make, including the house payment. Now, if you have no debts, the house payment cannot exceed 42% what you make for FHA loans, which is the first time buyer loan, the FHA 3.5 loan, all the other ones kind of fall around that line. So just think about it. Like you cannot exceed over about half of what you make with total bills. Your house payment cannot exceed about 40% above what you make. That's easily how the bank calculates it. Now, if you do that math, someone that makes $5,000 right now cannot exceed $2,500 approximately in payment. So if they have $1,000 trocona mamalona, that only means they only qualify for $1,500, which I know you think is a great freaking amount, but it doesn't buy you anything. And that's why we need to budget for what we want. Now, if we want to budget for the house that we want, there's two ways to do it. Budget for the house you want or try to get the house you can get. And that's the hardest one. I feel people, they struggle with it. Like, that's all I can get? Yes. And if you want a better home, you have to have, back to rule number one, a good financial plan. So the way I tell people to calculate, if you want your dream home, figure out what the monthly payment would be for that home, all right? If right now you're paying, say, $1,500 in rent and your dream home or the home you want to get, you know the payment is going to be about $3,500 to $4,000 because that's where it's at right now. It could go down, but that's what it's at right now. Well, first you have to figure out if you can make that money. What I tell clients, for a few months, you save the difference in payment, and I would give or take another $500, $600 for bills and stuff because they are going to be bigger. Then you can afford your dream home. Let's be realistic. I feel like a lot of people are like, you know what? I'm just going to wait for the house market to go down. It's not going to go down. That's another rant I have for later, but stop waiting for it to go down, okay? So many of you missed out on the opportunity between 15 and 20, and I talked to a lot of you because you were waiting for the market to go down, and it didn't go down. No matter how many speeches I gave you, no matter how much I told you, I don't see it just by logic. But anyways, that's how to budget for the house you want. Now, to budget for the house you can afford, once again, calculate how much are we saving right now at the pace, living comfortably, because here's the thing, there's what we can afford or what the numbers say we should afford, but we all have different living styles. We all love doing different things. And I do believe it's important to be able to do the things that move us forward, you know, keep us healthy, right? So budget that in and figure out what is the housing payment you can make. So say you're paying $1,500 right now and you decide the max I can push it is about $2,000 because with bills and stuff, that's where I want to be. Then figure that number out. Now, I'll be honest with you, it might be low. And if you want to live low and comfortably, you might have to move to somewhere where the homes are that size. So I hate to be the bearer of bad news, but it's yin yang, man, good with bad. You can't have everything. Something has to be sacrificed. Either the lifestyle you have to be able to afford more, or your lifestyle stays up here and you're living, you know, wherever you feel you need to live this lifestyle. So that's all on you. But you need to know that budget, because the last thing you want to do is buy a house payment this high and your lifestyle stays high and it's not going to work because you don't make enough money. You don't. So know your budget and be honest with yourself. And honestly, be aware where you're at. What can you really afford? And stick to your budget. Last one on the credit is avoid opening new accounts, okay? No, it doesn't help you with your credit to get a car or get the joyeria at Don Victor's right there, wherever it's at. If you already have some credit cards and establish good credit, just try to maintain that. Or once again, talk to an expert. But don't just willy-nilly go and open new accounts because you believe that's the best way to get your credit. Talk to a lender, talk to someone that actually knows what they're doing, okay? You can message me too. I'll answer your question. Let's talk about finding the right mortgage for you, especially if you're a first-time buyer. Being a first-time buyer, there's 4 options typically for first-time buyers, okay? 3 of them are government loans, which would be FHA, VA, and USDA. There's one that's a conventional loan. Now, what's the difference between government and conventional? The government-backed loans, basically all of them have an agency backing them up, basically helping you with the down payment. Not helping you per se, but telling the banks that if they're to default, they'll come in with the difference, and the bank can keep the property and resell it. VA is strictly for veterans, but it'll help you with 100% of the down payment. USDA is by the Department of Agriculture, which also helps you with the whole down payment as long as in specific areas. Usually they approve homes in like rural areas, like middle nowhere areas, kinda. Or ranch areas already. And then the last one's the FHA. Now, FHA is backed by the Federal Housing Administration, and that one allows you to come in with 3.5% of down payment. So instead of 20%, it's only 3.5%. The difference, 3.5% on like a $400,000 purchase would be $14,000. I know that sounds like a lot, but it's still less than $80,000, which would be the 20% down if you went with a regular loan. Now, the conventional loan, the insurances for the other 3 don't really care whether your credit's good or bad. They're trying to help you out as long as you meet the minimum requirement. For some of them, it's 580. The others is 640. Conventional though, conventional will allow you to come with 3% down. So on that same $400,000 purchase, you'd only have to come in with $12,000. And your mortgage insurance, that insurance that you have to pay monthly, because that government backing comes with like an insurance you have to pay, a premium, which is your PMI. Conventional also has that, but they're based on your credit score. If your credit score typically is above 700, 710, your mortgage insurance is going to be cheaper. If it's lower than that, it's going to be more expensive than if you went with FHA or any of the other ones. So those are where like I really tell people, we really got to look at your scenario to see which one's best for you. Not just because you read this one's better. All loans are specific, okay? Those are the type of loans. Now there's terms. Now terms means how long is it? So for 30 years, you're gonna agree for 360 payments. So there's 15 years with 180, and there's 20 years, which is 240. A lot of people think that the interest rate's a lot bigger, but there's a huge difference in interest rates if you go either or. I personally have never seen that much of a difference. Like to me, it's like, okay, give me the 30 years, give me 30 years to pay. And if I want to pay extra, I can, because you can do that. If you give an extra payment once a year, you will end up paying the house down. I have to do the math, but I think it's about in 17 years rather than 30. On a 15-year loan, your payment's gonna be way higher than on the 30-year. And my view is I can get the 30-year loan and still pay more like if I was paying the 15, and the benefit's almost the same. You'll end up paying the same amount. The difference is that, say hard times come by and I can't pay this huge payment. I gotta reduce. That's when it's kind of helpful, because now you can go ahead and back to the 30-year payment instead of sticking to that 15-year payment that you're struggling with. So that's the only difference. If you want to pay it faster, just get the 30-year loan, send 2 payments a year, and you'll end up paying that quick. When you're ready to buy that home, here are the things you need to get that loan. First, you're gonna need your ID, you're gonna need your social, the last 2 years of taxes, including your W-2s, 1 full month of pay stubs, make sure you're still working and making good money, and 2 months of bank statements. Those are the things we need to be able to run and like that diagnosis I told you, and let you know how much you qualify for. Now, it's important you do this before you go buy a home, okay? Because you need to know if you have the money. A lot of you do this backwards. You see a sign on a house you like, and then you call us like, hey, what does it take to buy that house? You know what? I don't even feel bad about saying that, because 1 in 10 will actually have the stuff ready to buy the house. Everybody else, you just get mad at me because like, oh, what can I do? You should have gotten ready, right? This is what these videos are for, okay? During the home buying process, you're gonna need help. You're gonna need your real estate agent, you're gonna need your lender, you're gonna need home inspectors, you're gonna need the termite inspectors, you're gonna need people to help you and make sure that you're getting something solid. And you need people that you feel comfortable with, that you feel, 1, have your best interest, and 2, will take the time to explain to you what's going on. Time and time again, I met clients that have some agents, and I'm sorry, you'll know who you are, that really are just about the sale. And as much they're helping you out, they help you buy the house and everything, I don't believe there's a lot of thought gone into, is this the best fit for our client? And that's on you. As the client, you need to interview several agents, pick the one that you feel the most comfortable with, and you actually feel like they listen to you, listen to what you want, and go after what you want, and have your back. With the other professionals, check their ratings, check everything. The final step, now that we're ready to buy a house, is actually buying the house. And I want to kind of break down the terminology once you buy a house, right? So when you go with your real estate agent and you're shopping around for the house, you're going to notice that you're going to be sending back and forth what we call offers, right? And you're negotiating and you're asking the seller, this is how much I want to pay for your house. And the seller's like, no, that's too little. I don't want to pay. I don't want to lose so much money. And then you're back here, but like, well, I don't want to pay so much money. Remember, it's a negotiation, all right? And this is my way of negotiating. It might not be the best, but I find like it's the least stressful. Remember that at the end of the day, both people are trying to get to a common goal, right? You're trying to work together where the seller who was leaving anyways, or whatever they have plans, they leave them feeling good about themselves, and you want the best deal for you at the same time. But like I said, there's compromise sometimes. And I feel like if we come into it that way, things go a lot more smoother, all right? Being realistic about things. But when people are like, I want to win, like this is a freaking like game or a fight, and I'm like, I'm going to win, nobody wins, right? It just makes it stressful for everybody. So at the end of the day, you just want to be knowledgeable enough so you be able, and that's why it's so important to have a good agent that can explain to you what's going back and forth. And also you notice that he's also pushing back where he can, because there can be like that, like stubborn agents can be on either side. So that's why like you want an agent that you feel like is pushing for you, but at the same time, when something that you don't like happens, they're handling it well, either by explaining it to you what's going on, or you see them taking action doing something. So that's why it's very important for that agent. So now we're in contract, okay? When you're in contract, you have several days to be able to inspect the home, and the banks can also evaluate it. There's 2 types of inspections. There could also be what's called a termite inspection, right? Make sure that the wood and everything's good. But one inspection is for you, for basically check the house. Like when you're trying to buy a car and you take it to the mechanic, yeah, your inspection is like the mechanic checking the house, making sure like that there's no stuff going on, and there is, identifying it to see if the owner will repair it or give you money to repair it or not do nothing. And all 3 happen all the time. But you want a good home inspector, right? You want someone that's actually going to give you and make you, like, once again, make sure it gives it a good thorough of the home and identifies what's normal in wear and tear in a home and what's actually dangerous. I've had some deals, we lose them over little things being blown out of proportion by inspectors. So really, that's why you want to get a good home inspector. Look at their ratings and stuff. The other inspection is by an appraisal, but that's by the bank. The bank sends someone to say, hey, this home in this location with everything around here should sell or is worth what they're asking for. The bank needs that, because say the day of tomorrow something goes down and you leave the house, they want to make sure that when they try to resell it, they're going to get that money. So that's what the appraisal is. Your home insurance, very important. You want to make sure you get good home insurance, especially if some damages were to happen in the house. You want to make sure you're covered. Now, there's also what's called the home warranty, which protects the appliances in the house. You want to make sure that you negotiate, or at least get it. If you have to pay for it, get it. But typically you can negotiate with the seller to get your home warranty, which protects all your appliances for at least a year. So at least you know you're covered a year after the owner has left. Like I said, buying a home is a journey. It's a great accomplishment. It's a great milestone, but like a milestone, it takes preparation and it's a journey, okay? So prepare yourself for that journey. The reason I want to make this video, because I have a lot of friends and a lot of people I've known throughout the years and a lot of potential clients. Just to recap, you want to start with a good financial plan. That good financial plan is going to lead you to know your budget, which is step number 2. And having control of your budget is literally going to help you with step number 3, your credit. That all has something to, that's why I'm lining it up this way. If you do it this way, you should be on track. Number 4 would be gathering the documentation we talked about. Once you have all the documentation, which is your 2 years of taxes, your bank statements, and your pay stubs, then you could go to step number 5, which is looking into your mortgage. Once you get approved for whatever mortgage you get approved for, look for the right professional. Then it's when you start looking for your real estate agent. Then is when you start looking for the people that are going to help you to find the home and then through the home buying process. The final step, once you're in the negotiations, once again, you're going to have a good real estate agent that's going to help you through the negotiations, not just push you through, but explain to you what's going on. Why is there hangups? Why is not? During the negotiation, why could be the reasoning, or, just really working with you to get the best deal for you and, making the transaction super smooth. All right. So with that said, those are the things I feel that as a first-time buyer, you should do to get ready. You have any more questions, feel free to reach out, message me. And if you like my video, don't forget to like, subscribe, and share so we can have more conversations like this. And I can make more videos about this stuff that we're really trying to figure out together.